Hello and welcome to this first monthly video with Jim Rickards. We've decided to do this on a regular basis to help Jim explain how everything that he writes about applies to you at home. Jim, before we get into the questions that I did send you beforehand and some notes as well, I want to tell you about a news story that's popped up in Australia, which I think you're going to enjoy a great deal. I'm going to read you the headline and a few segments. I'm going to leave out a load of the details, obviously, and I'll get your reaction. America's massive profit at Australia's expense revealed as trade war with China escalates. The US is one of Australia's closest allies and says it has our back. But behind the scenes, America is profiting big time from our misfortune. Australia's devastating trade war with China has been a crushing blow for many industries and the wider economy as a whole. And while our allies have publicly backed us, behind the scenes, they've quietly benefited from Australia's misfortune. And the interesting part, while our partners have loudly supported us on the world stage, they've had no qualms when it comes to muscling in trade-wise. What do you make of this story, Jim?
Well, one has some difficulty thinking of Australia as an unfortunate country. Its name is the lucky country. And I've been in Australia many times. Beautiful country, love going there. I have a lot of friends there. I miss them because I haven't been able to get back to Australia for a couple of years. I was used to going at least once, maybe twice a year. Look forward to the next opportunity as soon as they open up the country a little bit. I guess that's happening in stages, although maybe some setbacks now. But yeah, first of all, the Chinese trade war with Australia has backfired on China. It was because Australia, I thought very courageously, and I applaud them, called for an independent investigation of the Wuhan virus. Of course, in my book, The New Great Depression, and many other sources, it's very apparent that this did come from the laboratory, the Wuhan Institute of Virology. The virus was bioengineered. Does not mean it was released on purpose. Probably more likely it was released by accident. But no question about the fact that the bioengineering was going on inside the lab. They were trying to increase the lethality and, in fact, contagiousness or infectiousness of this virus. And Australia didn't point fingers. They just said, why can't we have an independent investigation? Well, my view is if China has nothing to hide, they would welcome that, but they have a lot to hide. And so they immediately not only rejected the notion, but said, we're in a trade war with Australia. We're in fact going to punish Australia. The only problem is they need Australia. China's got to keep its own economy going. They need coal for their more than 50% of their electricity is from coal-fired plants. I don't care what they say at, COP26 in Glasgow. They're burning coal like crazy, and a lot of it comes from Australia. They need iron ore to basically create steel, to make steel for the construction boom, which is mostly wasted, but it does create jobs, at least in the short run. They need agricultural exports. They just need so much of what Australia has. So the idea that somehow they're going to have a trade war with Australia and prevail is ridiculous. So the only sector I would say where they have shut out Australian exports to China is wine. Of course, Australia has wonderful wine. I drink their Sauvignon Blanc all the time. It's my personal favorite, and the Shiraz and Merlot and a lot of other Australian varietals. So Australia's stuck with a lot of wine, and maybe some of that goes to the United States. I tell my friends here in America we can. Although I should be candid, I'm actually in Canada right at the moment, but I am an American. I spend most of my time in America, and I say, buy Australian wine. It's good. It's a little cheaper than usual because they're having to sell it where they can. But I'm not really aware that the U.S. is taking great advantage of Australia. I mean, we don't compete in computers, really. We don't compete in aircraft, tourism, yes. Wine, yes. There are some sectors. I can imagine the U.S. is trying to, not in fact, I don't have to imagine. One of my family members is head of marketing for the Empire State Building, and they're doing everything they can to encourage Chinese to visit. They tend to be big spenders. So there may, in fact, be a few sectors, and again, I would say tourism, wine come to mind, but I think in really large industrial sectors, the U.S. doesn't export to China the way Australia does in terms of natural resources, and Australia doesn't compete with Boeing and aircraft manufacturing. So I think we kind of have our own niches or comparative advantage, and so it sounds like the article is a little overstated.
Yeah, I agree. And I think the key twist on the story is that a lot of what's quoted in there, a lot of the examples you mentioned, the goods are fungible. They're internationally traded. So if China isn't buying from Australia, it just buys from Brazil. And whoever was buying from Brazil, buys from Australia instead. And it sort of doesn't really work in the way that I think the article and the report on which the article is based, what they're assuming. Let's move on to the supply chain chaos story, which is part one this month and part two next month of Strategic Intelligence Australia. I would sum up what you've written as an analogy that I learned from you that you've used for a very long time, which is all about this snowflake and avalanche theory. The idea that it's not about what has triggered the supply chain chaos, but how fragile things were at the very beginning. So for the few people who haven't heard that analogy, can you explain it to us?
Well, thanks. Two things. First of all, it is an analogy or a metaphor, but it's a meaningful one. I don't mind metaphors that track very closely to the phenomena you're trying to describe, right down to the mathematics, because it is a useful way to communicate without a lot of jargon. I don't particularly like metaphors that are kind of just so stories are cute, but they don't really mean anything. That's why I've never used the phrase, or I don't use the phrase black swan. By the way, I've seen black swans in Adelaide in Australia. I encountered my first black swan there. They're real and they're in Australia. It's the idea that black swan stands for the unexpected, or you assume it doesn't exist, and all of a sudden there it is, and it comes as a surprise and may have consequences. Yeah, that's an okay metaphor, but it doesn't have a lot of explanatory power. It's just kind of a description. The snowflake avalanche metaphor, on the other hand, does have explanatory power, and I've used it in a number of contexts, and we can use it for the supply chain. It fits perfectly, but it's basically a shorthand way of describing complexity theory. So what we're really talking about are complex dynamic systems. Now, complex dynamic systems can be almost anything. It's not that every system is a complex dynamic system, but it is the case that complex dynamic systems exist almost everywhere you look. The universe is a complex dynamic system. The solar system been around for, I don't know, I guess 4 billion years or so. And the universe has been around for 12 or 14 billion years, as far as they can reckon. But it is a complex dynamic system. But there are many, certain, and certainly the supply chain is one of them. Nuclear chain reactions are another example. The weather, climate is a complex dynamic system. Water currents, there are many of them. And the snowflake avalanche is another one. And the idea is that, and I've done a lot of high altitude mountaineering. I've seen avalanches nearby. Unfortunately, I haven't been caught in one, not good, but so it snows and it snows and it snows, and you've got billions upon billions of snowflakes, and they build up and they get compressed, and different degrees of density, cracks form. It's a very complex dynamic system. Eventually, there's an avalanche, depending on the slope and the stability. What causes the avalanche? Well, it could be the wind, it could be weather, it could be the sun, the time of year. It could be a single snowflake that lands and jars a few other snowflakes loose, and they fall and gather momentum and take others with it. Next thing you have a slide, and then it's all going down a chute, and then the whole mountainside breaks loose, and you have this avalanche, and you bury a village or something below with disastrous consequences. But the point is, a very, very small initial cause leads to a catastrophic or disastrous outcome. Completely disproportionate, is exponentially greater than the cause. That's characteristics of complex dynamic systems. All complex systems collapse eventually. It could be a billion years, or it could be a few weeks, but they do collapse because they're inherently unstable. It takes more and more energy inputs, exponentially more inputs to grow the system. They keep growing, but the inputs needed to keep the system growing are exponentially greater than the growth of the system itself. So you do get to a point, it starts out, you have just a few inputs give you great payoffs, great productivity. But it's like any other curve, it goes up and then it flattens out. So now like your inputs and your outputs are about the same. And then it starts to go down to the point where your inputs are still greater. You're going out the x-axis, but you're going down the y-axis, meaning your outputs are shrinking. And then finally you get, that's diminishing marginal returns. And finally you can get to negative marginal returns, where you put in a certain amount, and you don't even get that much. You get or less than you did before. You actually, begin to collapse the system. Societies work this way. Civilizations work this way. Construction, engineering, and some of the systems we mentioned, economies work this way, and the supply chain works this way. So we've been building these supply chains, and I'm really talking about post-1990 globalized supply chains. I mean, I'm working, doing quite a bit of writing on this, and we've had one of our monthly publications took a deep dive, but we're going to do part 2 coming up this month. And, so doing quite a bit of research on it. And the first thing I decided, it's one thing to say the supply chain is part of the economy, but I would actually go further and say the supply chain is the economy. You can't think of a good or service, anything you buy, anything that's delivered to you, any service provided, that's not part of a supply chain. It didn't just fall out of the sky. You buy something in the supermarket, it could be a bag of corn chips, let's say. Well, okay, where'd the bag come from? Somebody had to make the bag. There's advertising or marketing on the bag. Some designer had to do that. Where did the corn chips come from? Well, they were fabricated from a corn mash. Where did the corn come from? Well, it came from a farm. How did it get there? Well, it was taken by truck. Who drove the truck? A truck driver. And how did the corn get harvested? Well, large harvesting operations, et cetera, et cetera. So you start going back, the bag, the printing, the advertising, the marketing, and then the corn and the harvesting and the processing and all the transportation, all the communication that goes into it. That's for a bag of chips. Now, imagine everything in the supermarket, everything in the mall, everything you buy, an automobile, on and on and on. And suddenly you realize that you live in a world of processes and inputs and outputs that come under the heading of the supply chain. Now, what has been going on for the last 30 years? Well, supply chains cost money. If you have inventory, you're tying up working capital. If you hadn't bought the inventory, you'd have more money in the bank. So there's a cost associated with the inventory. Transportation costs money. Inputs cost money. Commodities cost money. Marketing costs money. Distribution, et cetera, et cetera. So the whole supply chain is basically your cost structure. And then you sell it for what the market will bear and you make a profit. Well, 2 ways to increase your profit, or 3 ways. One is to increase units. Okay. But that just puts stress on the supply chain. Another one is to raise prices. Well, good luck with that because of competition and economic cycles and so forth. Maybe a little bit, but there are limits to that. But the third way to increase profits is to cut the costs in your supply chain. And there are lots of ways to do that. And one of them is the famous Japanese model, but it's now worldwide, of just-in-time inventory. If you're running a car assembly line and you're putting seats in the car, at some point in the assembly line, you can have a warehouse full of seats. Okay, you always have one in hand, but that costs a lot of money. But what if you had a system where the seats arrived at the factory the day before the day of the installation? So here's the seat and here's the body, boom, put it together, keep going. That's just-in-time inventory. It cuts your costs a lot, unless the seats don't arrive. Then you got to shut down the whole assembly line because you're missing one of the key components. You can't go any further. So the good news is that you can cut costs and create efficiencies in the supply chain to increase profits. The bad news is that you make the system more and more fragile. So now you're sort of like, again, the snow is building up. You're getting ready for an avalanche. Well, imagine doing this along the lines I just described in every product, every good, every service, all over the world, with global supply chains for the last 30 years, wringing every penny of cost out of the process that you can. And if your supply chain is longer or shorter, is that good or bad? Well, the answer is there are trade-offs. A longer supply chain might have higher transportation costs, but it might have lower labor costs because you're stretching the supply chain out to a place like China with cheap labor. Or you might do the trade-off differently. You might say, well, I'd rather pay a higher wage in Australia or the United States or Canada, but I can shorten my supply chain, improve reliability, and reduce my transportation costs. Well, between labor and transportation, where's the trade-off? Well, you have to, as they say, do the math. That answer will vary depending on the product. But the point is, those are the kinds of decisions, optimization problems, optimization processes that are behind the construction of the supply chain. Well, we've been doing this for 30 years. I say we, both the developing economies, the advanced industrial economies, have been doing this for 30 years, going back to the early 90s, squeezing every penny out of it, optimizing everything we could, just-in-time inventory, longer supply chains, cheaper labor, more transportation links, using ships because they're cheaper than planes, et cetera, et cetera. And you got a pretty good result. Clothing prices are down, electronic prices are down, quality is maintained, but you have an extremely fragile system. It doesn't take much to screw it up. And that is what has happened. It's happened over the course of the last 3 years. It's become acute very recently because you're actually going and finding bare shelves. The joke during the early stage of COVID wasn't funny, but during the early stages of the lockdowns in the spring of 2020, we'd go to Costco. That's one of these big box stores. I'm sure they have rivals in Australia. And the paper goods aisle was cleaned out. People were buying, whether it was toilet paper or paper towels or whatever they were, where they would run out. Well, okay, that was a very specific example, but now it's everywhere. Whether it's it's the hot sauce or the condiments or the chips or the bread or the cleaning detergents, soaps, milk, whatever it is. Not everything all at once, but you're finding bare spots on all the shelves. Well, what's the reaction function? There's a particular brand of salsa I like. It's very spicy. I usually buy 2 jars, and when I run out, I buy 2 more. But I was in the store the other day, and there were only 4 jars on the shelf. Now, it's a deep shelf. Probably should have been 20 jars there, right? But there were 4. I bought all 4. Well, I usually buy 2, but I bought 4 because I say, well, what if I come back and there are none? At least I'll have the 4, right? But I didn't do the next guy any favors. He got there and the shelf was bare. Well, again, that's hoarding. It's the name for it. It doesn't sound very pleasant, but that's what people do. So you start out with a supply chain shortage caused by some factor. And again, it doesn't even matter. You can identify some, but there it is. And then there's behavioral adaptation. We make it worse. We go out and hoard, we buy 4 instead of 2 or 6 instead of 4 or whatever, making the situation worse. And then you do get the bare shelves. And everyone's pointing fingers. They're looking in the United States, at least at the port of Los Angeles. That's our largest port. All the container cargo vessels, practically from China, Vietnam, and elsewhere, show up at the port of Los Angeles. Normally there are 10 vessels waiting to unload. The recent data, there was up to 80. But these, when I say vessels, these are, 7, 8, 900 foot vessels, 300 meters, piled high with thousands of containers, and they're just sitting offshore. They can't get them unloaded. Everyone said, well, it's the shipping company, or it's the port facility. Why don't they work harder and, do 3 shifts and work around the clock? Well, the fact is they do. They have been, but they can't unload them because there's nowhere to put anything, because the docks are already filled with containers. So you can work around the clock if you want to, but you can't unload the ships if the docks are already full. Well, why are the docks full? Well, the truckers can't get them out. So let's blame the truckers. But you talk to truckers and they say, well, there are all kinds of regulations, and they tell us to come on Monday to pick up the red containers, and we get there and they say, come back tomorrow, or we can only get blue containers today. The trucks are getting in each other's way. And then further down the supply chain, let's say you got a truckload and you got your container on your truck, and you take it to a distribution center and, in a different city, a different part of the country, and you find that there's no place to put it at the distribution center. So you leave it on the truck, you turn your truck into a kind of storage facility, warehouse, if you will, and you park the truck with the container on it. Okay, that's a short-term solution for that one container, but now that truck's out of service. The truck can't go back and pick up another container if it's parked holding a container. It's no different than the vessel parked offshore, and so on. Again, I'm giving some hopefully very clear-cut examples, but apply it to everything. Commodity inputs, and then there's an energy shortage, believe it or not. And this is particularly acute in places like Germany, which have had very misguided policies. China is running out of energy, and they've had to, for political reasons, they direct the energy inputs to cities and population centers. They don't want people freezing in the dark. It'll start another revolution. Okay, well, that might be politically sound, but what does it do to steel mills and mines? who now can't get the energy they need to keep doing what they're doing. And if they can't build steel, that ends construction. Well, that causes unemployment. So again, not to belabor it, but you see that when you really understand how long and how complex the supply chain linkages are, and how one small failure in any part can ripple and does ripple through the entire supply chain, and then it builds on itself. It gets worse and worse and worse. That's where we are. I talked to a guy who can fairly claim credit for inventing the modern supply chain. Of course, millions of companies and tens of millions of employees and engineers and consultants working on us around the clock. But he was a leader, CEO of a major company that most other CEOs and government officials would say, yeah, you're the guy who got it right. You're the guy who really figured out how to do this. And he said to me, he said, Jim, my question for him, I'm doing some work on this. I said, is this going to be over soon? Because I don't want to put so much time and effort into it if it's like a 3-month kind of thing. He said, Jim, you got to understand, it took us 30 years to build it. We blew it up in 3 years. It's not coming back in less than 10. This is a 10-year problem, if not longer. So that will give, hopefully, listeners some idea how long this is going to persist.
Well, Jim, I can tell you who's to blame for all of this. It's actually my dad's fault. You see, he went to Japan in I think the late 80s for a while, working for a Japanese company, electronics company, which shall not be named. And then he brought that knowledge of just-in-time inventory management to an American company, possibly the one that you're talking about. I wonder. And he introduced the idea of building what the customer was buying once they'd already bought it, and manufacturing and delivering so efficiently that the supply chain issues were minimized in such an extreme way that the cost competitive advantage was huge. And then that obviously went global, as you say. So I'm going to blame my dad for it. I'm not sure if we're talking about the same company. I'd love to know. It would be fascinating.
Well, I don't doubt that your dad was a key player in this, but without having further insight, I will say that Toyota in Japan is generally given the credit for the invention of just-in-time, and it actually became known as the Toyota method or the Toyota process. No need to drag Toyota through and blame Toyota for everything, but it was they were kind of inventors of just-in-time, and you're absolutely right. That is the norm. It cuts costs for sure, but it makes it very fragile.
Yeah, it's this trade-off between efficiency and fragility. Right. I have to accuse my dad. I have to remember. Jim Rickards said you caused all this mess. Let's move on to narrative economics, one of the topics that you covered in a recent monthly issue. Which narratives do you think are holding sway right now in the global financial market?
Yeah, I'll be glad to address that, Nick. First, maybe just spend a minute on what we mean by narrative. Of course, it kind of means story, but it's a little more complicated than that. But the idea of the narrative is that there is a way of describing a situation. You call it a story. It makes sense. There's some evidence for it, and it is a way of communicating a whole cluster of ideas. So instead of resorting to technical jargon and equations and everything to explain monetary economics, you can just come up with a narrative. And the narrative right now is that inflation has run ahead of expectations. Inflation has got a little bit out of control from the central banker's point of view. They're behind the curve. They're going to have to raise interest rates. They're going to have to tighten faster. We're already seeing this in New Zealand. We're seeing it in the United States. Recently, just literally in the past few days, Jay Powell, our chairman of the Federal Reserve, our central bank, kind of threw in the towel like a boxer. Doesn't come out of his corner. He said, "Okay, inflation is not transitory. It's going to persist." That was a big deal because he'd been the one. Yeah, I see the numbers, but it's transitory. It'll go away. I still take the view that it's transitory, maybe persisting a little bit longer than expected. But Powell, there's a lot of politics behind this because he's just been named by President Biden to serve another 4-year term as chairman of the Fed. But there is a Senate confirmation process. He'll get confirmed, but there'll be hearings and a chance for the senators to beat him up a little bit. And he was sort of doing damage control, backing away from his transitory position before the senators say, "Don't you know the price of gas is going up and the price of milk is going up and my constituents have to pay more?" Yeah, there's truth in all of that. So I'd say he's playing a little bit of defense there. But Powell, in effect, has joined the narrative of higher prices, runaway inflation, Fed has to tighten, and then it has all kinds of economic consequences, because if you think US interest rates are going up, which people do, you probably want US dollar investments. You probably want to, sell Australian government bonds or German government bonds or gilts and buy US treasuries, short-term US treasuries, and then, roll them over at progressively higher rates and enjoy higher US interest rates. And that's one of the reasons the dollar is strong. And that's one of the headwinds for the dollar price of gold. And so it does have these ripple effects and affect stocks, because stocks compete with bonds. So if bonds are going to have higher yields, maybe you want to sell some stocks. And our stock market has had a couple rocky days recently. So it's a very big deal. But here's the thing about narratives. First of all, they do exist. Many, many examples. Secondly, they're very powerful. There's something called the self-fulfilling prophecy. And this was identified by the great sociologist Robert K. Merton in some work he did in the 1930s and 1940s. But he said, the classic case is before we had deposit insurance in the US banking system, but you'd have a bank, and maybe a small, medium-sized bank, and it was perfectly sound, nothing wrong with the bank. But a rumor started that, hey, the bank was insolvent, they didn't have enough cash, they were, bad loans. So a depositor runs down to the bank and takes out all his money. And somebody sees him and says, what are you doing? I said, I'm getting my money out of this bank. Well, me too, And then I'm getting my money out of the bank. Well, next thing you know, a line forms. The line's around the block. Everyone's taking the money out of the bank. And guess what the bank does? Eventually, they close their doors and they do go out of business. In other words, there was nothing wrong with the bank at the beginning of the day. But because a narrative was created and got out there, people believed it, then the response function is they acted in accordance with the narrative, not in accordance with the reality, because remember when we started, the bank was fine. They acted in accordance with the narrative, and then the narrative became true as a result of everyone's actions. So something that's not going out of business can be out of business by the end of the day if everyone thinks they're going out of business. So narratives are powerful. They do drive economic behavior. You have to pay attention to them. You can't just be doing analysis, test tube type analysis, mathematical equations, and ignoring what's going on outside your door. However, narratives are not always true. Even when they're false, they can be powerful. So I spent a lot of time doing predictive analytics, and you try to get everything right. Perfect, but you try to come as close as you can to getting every input right. And then as we did more and more research, worked with my partners and developed these systems, we began to realize that, you want to get the data right, you want to get the analysis right, the directions and the weight and all that. But we have to take into account things that are wrong. We weren't used to looking for things that are wrong, but we said, well, if there's a narrative out there, even if it's wrong, if it's powerful and people act in accordance with it, it becomes a factor, whether it's right or wrong. That's a big deal. One kind of recognizing, what I just described. So the question, I think, to answer your question, Nick, is what's the biggest narrative out there today that's driving behavior? The answer is expectations of inflation, and the follow-on, the knock-on effect is that central banks are going to have to raise rates, and the one who raises them first gets the capital inflows and makes their currency stronger, and that means a stronger dollar. So that's the narrative, no question about it. But what if it's not true? What if, inflation as measured has been higher for the last 6 months. I always say you can have your own views, but you can't have your own facts. You have to stick to the facts. And the facts are inflation has been hot. And in April, May, June of 2021, you could explain it by base effects, because the way we report inflation in the United States, it's monthly, annualized on a year-over-year basis. So you take May 2021 compared to May 2020, there's some increase, year over year, and then annualize that, and that's the inflation rate for the month of May, and then so on. Well, when we looked at April, May, and June, or even July, what was going on in April, May, June, July of 2020? It was the first lockdown from the COVID. It was the worst economic performance practically in U.S. history, I think, since 1946. So you would expect prices to go down, and they did go down. So when you saw them going up in the spring of 2021 on a year-over-year basis, like, well, that actually makes sense, because they were going down the year before because of the pandemic lockdowns. But then as you got into September, October, November, you would have said, well, what was happening in September, October, November 2020? The answer is that was the bounce back. That was one of the strongest third quarter growth in 2020 was almost the strongest in U.S. history. So you would expect those base effects to go away. Well, the base effects may have gone away, but the inflation didn't. It persisted. Now, whether that's because now all of a sudden the supply chain problem is kicking in, or it's expectations have changed, these are all debatable factors. But the fact is the inflation has persisted. Here we are in now December, and we'll see what the latest data brings. Will it be one more hot month where inflation is pretty strong and then it really falls off a cliff very quickly, or will it start to feed on itself? And that's the big debate. But the reason I'm trying to distinguish between the narrative and the reality, sometimes they're the same. Sometimes the narrative's spot on, but sometimes the narrative is pointing this way and the reality is going like this, and you get this gap. There's enormous profit opportunity in that gap because reality always wins. In the short run, the narrative can prevail. It does affect behavior, but in the long run, reality always wins. So if you see a situation where the narrative is here and the reality is here, you want to own that spread. You want to make a bet that says that's going to collapse. That spread's going to come in. There are ways to do that. But, of course, timing is everything, as they say, and you can be early. And if the narrative persists, you don't want to lose money in the meantime. So you have to kind of bear with it. You bear up to the criticism and people telling you you're a dope and all that. I'm used to that. But my view is that the inflation will fade. I'm not calling for deflation. I'm calling for disinflation, meaning inflation's still around, but at a lower rate. This will be the result of slowing in China, supply chain problems, some of the base effects, giving them a little more time. The impact of Omicron, the new variant and the thing is, high prices are a good leading indicator of low prices, meaning if gas at the pump is going up, which it is, it has doubled in the past year in the United States, gone from, round numbers, about $2 a gallon to $4 a gallon. Everyone thinks we have cheap gas in the US. Maybe we do, but it seems expensive to us. But anyway, we've gone from $2 to $4. All right, you still have to put gas in your car, but that extra money you're spending at the gas pump reduces your discretionary income for you to spend on other things. So you might be skipping a meal or skipping a trip or skipping, some new clothes or entertainment or anything you care to mention because you're putting your money into the gas tank. So that could actually be a drag on prices or growth in other respects. So we'll see. I keep an open mind. I update with new data. It's this issue, this narrative versus reality issue is too complex to put a stake in the ground. The best way to deal with it is to stay nimble, pay attention. This is what we do in our publications. We keep readers up to date on all of this. But yeah, there's a powerful inflation narrative. The jury's out on whether it's going to persist or not. My own view is that the reality is going to be disinflation and that there's a good opportunity to profit and make some good investments and good trades by arbitraging the difference between the narrative and the reality.
If supply chain chaos is what's behind the inflation and base effects before that, then it strikes me as precisely the wrong thing to do is tighten monetary policy, because that's just going to make all the supply chain issues worse, and that could trigger a debt crisis and on and so forth. Do you think this admission and this shift from Powell has raised that risk?
I do, and I was greatly relieved when he did it. Of course, it's the Fed has a very long track record going back to 1913 of doing the wrong thing at the wrong time. They're just always wrong. Maybe not always, but very close to always. And I was very uncomfortable last summer because I took the view that rising inflation was transitory and disinflation would be coming. And Jay Powell agreed with that. And it made me uncomfortable. I said, well, maybe I'm missing something here. I'm in accord with the Fed and they're always wrong, so maybe I'm wrong. But fortunately, to my relief, the Fed pivoted away from, got rid of transitory. So I felt much more relaxed. I'm like, okay, I'm on the opposite side of the Fed, so that means I'm probably right. But yeah, it's a very big deal. If the weakening factors that I described, so it would include the supply chain, the Omicron variant of the SARS-CoV-2 virus, demographics, which are a big factor. We maybe we'll talk about that in another call. Energy shortages. The supply. I mentioned the supply chain already. There are a number of factors that are coming into play that suggest lower prices to me and weakening economic growth. Why on earth would you tighten monetary policy in that state, in that condition? The answer is you wouldn't. But Jay Powell is because he says he's worried about inflation. Okay, well that's his choice. That's the board's choice, the board of governors' choice. But it looks like the wrong thing at the wrong time. They're tightening. By the way, China is doing the same thing. I mean, we're in a kind of an age of king dollar right now. The dollar, U.S. dollar, is significantly stronger compared to the euro, the Japanese yen. A little bit Australian dollar did rally about a month ago, but it's kind of faded recently. So the U.S. dollar is very strong against all these major currencies of major trading partners, except China. And there, the Chinese yuan has been strong. Now, for decades, the Chinese approach was to have a cheap currency. They're in the export business. They want people to buy their stuff. And if you have yuan-denominated costs that translate into dollars at lower levels, meaning the U.S. dollar is up, the Chinese yuan is down, but you're paying your people in yuan, but you're selling your goods for dollars, which they were to a great extent. Well, in that world, the cheaper your currency is, the more money you make, because you can still charge, a high dollar price, or at least maintain the spread. Well, if you're that export powerhouse, which they are, why would you want your currency to be stronger? And the answer is it has been. And the People's Bank of China has not eased very much, a little bit, but they have not cut interest rates very much. They have not relaxed the reserve requirement ratio. It has to do with bank leverage. They did a few months ago, but not recently. They seem relaxed about a strong yuan. Now, there are two sides of the export story. What a lot of people don't realize is that China's value added on some very high priced products is only about 5 or 6%. Everyone say, well, they make all the iPhones. Well, they do make all the iPhones, but they don't really make them. They assemble them. They got to buy all the stuff that goes into the iPhone. So the Gorilla Glass, the semiconductors, motherboards, the shells, the design, the intellectual property, all that stuff comes from somewhere else. It comes from California or South Korea, Germany, Japan, and Italy, among other places. I actually was doing some research. So Apple publishes their supplier list. They don't tell you exactly how much they pay each supplier, but they do publish a list of all the companies and places that they buy from. And I don't know the exact numbers, but it was well over 100, I think about 150 suppliers in something like 47 countries. Well, China is only one of those countries. So if that's what goes into an iPhone, China has to buy stuff from 46 other countries to assemble the iPhone to sell to, 100 countries around the world, starting with the United States. So a weak currency is a two-edged sword. On the one hand, it reduces your costs if you're selling for dollars. But on the other hand, you need more of it to get hard currency, to get dollars, to buy the stuff you have to import to make the iPhone. Because again, the Chinese sliver of the value chain, we talked about supply chains, there's a value component to a supply chain, and China's only about 6% of the total. So they haven't suffered that much from the strong currency. They don't seem to mind it. And I don't know exactly why, although I suspect that there's a lot of political, I wouldn't call it change, but amplification going on in China. Chairman Xi has positioned himself. Everyone said he's going to be one of the big three, Mao Zedong, Deng Xiaoping, and Xi Jinping. But it certainly looked like the big two, Mao and Xi. They've run, I'm not sure how Jiang Zemin feels about it, but not to mention Hu Jintao, but those guys are now footnotes. But even Deng Xiaoping is not getting that much not publicity, but he's kind of being knocked down a peg in the pantheon. And you're pretty much down to Mao and Xi. Well, Xi doesn't want to rock the boat. They've got a plenum of a party congress coming up. Well, actually, they just had one where he was, Xi Jinping, socialist thought with Chinese characteristics for a new era. That's like the long mouthful, bunch of Chinese characteristics to describe how he's being enshrined, et cetera. It's a big deal. And the last thing he wants, he doesn't want civil unrest. He doesn't want economic hardship. He doesn't want a recession. He doesn't want problems. And so they're tying themselves in knots. I mean, everyone they send me a chart of Chinese coal futures, and it shoots up, about 6 months ago. It's very spiky because there's not enough coal. So they're paying ridiculous prices for coal. And then it goes straight down. They're going to see the coal crisis is solved. The prices come down. No, it's not. They impose price controls. Well, I mean, of course, the price is going to come down when you put price controls on. That's what happens. But then that creates all kinds of other distortions. You all of a sudden, if the price is actually that low because of the price controls, everybody wants some, but there's not enough to go around. So you have to do allocations. Well, how do you get the allocations right? Well, they don't really know. They're going to do it based on political grounds. But my point being, that's another, back to our first subject, Nick, a complex dynamic system, a fragile, case study in complexity theory. It wouldn't take much to have the whole thing come tumbling down. And the last thing, Xi wants is inflation. So those might be some of the things that go into this thinking about a strong currency, but we've got a strong dollar compared to everything else except China, which has a strong yuan. We'll see how long that lasts. I think they're going to break. I think they're going to have to, at some point, the benefits of stimulus will outweigh the risks of inflation, but they're not there yet. So they're just going to, kind of persist in that policy. But meanwhile, it's king dollar all the way.
Jim Rickards, thanks very much for joining us. Everyone at home, thanks for joining us as well. I've certainly learned something. I didn't know where the origin of the phrase "throw in the towel" came from until today. So, Jim, thanks for teaching me that one. I hope you've enjoyed it as well at home. Thanks very much.
Thanks.